Hi, this is James Shrug at Westpac London with the end-of-day report for Monday, the 14th of May. Well, it's a very negative day on equity markets today, mainly because of the Greek political situation with the President unable to get any of the parties to form an administration. It's looking increasingly likely that there will have to be fresh elections in June. And in the meantime, markets are worried about a payment that the Greek government has to make this week. Will they do it? Will they be able to do it? We've got EU finance ministers meeting right now as I speak, no doubt discussing the Greek issue. And indeed the Spanish situation, where the Spanish government just before the weekend imposed new rules on the mortgage market there in their fourth attempt to shore up the banking system. Which is starting to look very fragile indeed in Spain. So concerns about Greece to the fore. I mean, open discussion now about what happens if Greece defaults, if Greece leaves the euro. Will other European countries decide to soften their stance on the required amount of austerity in Greece and reach some sort of compromise? Or would that be too much for the Germans? Lots of questions, no answers of course at this stage, but markets certainly don't like uncertainty. We've seen the cost of insuring Spanish bonds rise to an all-time high. Bond spreads are pushing out again for countries like Spain and Italy. And in Greece, the stock market itself there, the Athens market was down another 5% today, so a fresh 20-year low. There wasn't much data today. We had just industrial production figures for Euroland. They showed an unexpected 0.3% fall in March. That's despite German figures last week showing a decent March rise, but French IP was down, Spanish IP was down, and others, such that the overall Euroland picture was for a modest negative. That helps rebuild somewhat the prospects that we'll see a negative GDP outcome for the first quarter in figures which will be published tomorrow. We get the advance report for the first quarter. I mean, our forecast is minus 0.1, and that would follow the minus 0.3 in the fourth quarter of last year. So a shallow still, but nevertheless recessionary economic picture. So that's the main news today, really. No data out in the US. So on the markets, just heading into the close, not quite closed in Europe yet, we've got the FTSE down 2.1% in London, the French market's down 2.2%, and the German market off 2% today. The Spaniards down 2.8% and 2.7% loss in Italy. The Dow is down just over 0.5% at the moment. That's at 12,748, a loss of 72 points. It was down more a little bit earlier in the session, but it's picked up somewhat since then. In commodity markets, we've got mostly negatives there too, with copper off 2.4%, oil off 1.6% at $94.50 a barrel, and gold prices are off 1.4%. We're looking there at $1,562 an ounce. The Aussie dollar temporarily dipped below parity in the Sydney trading session, but it's moved more substantially below parity today in London with a low of, 99.6 against the US dollar, although as I speak it's at 99.92. With equity markets off their lows, the Aussie dollar's managed to regain some of its lost ground, but certainly still just below parity as I'm speaking. We get the minutes to the Reserve Bank's May meeting when they cut by 50 basis points, so we'll be scouring those for any guidance they might give about future policy and of course for the reasons for their unexpected 50 points in one go. All right, I'll be back, got back tomorrow to report on the day's events, although this is my last week for a couple of weeks because I'll be away from the end of this week for 2 weeks. Okay, speak to you tomorrow. What have I done?